Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Okay, well, when I started this, when I set up the stream last night, you know, and I sometimes if I know something's going on or whatever, I'll put a title in there. So I put in the title, "The world didn't end, what do we do now?" Then I wake up and they're shelling in Donbass. Now, this doesn't necessarily mean that there's like Ukraine invasion imminent, etc., etc., etc. In fact, I think what it means is that the action that we're going to see in Russia-Ukraine situation is going to be a lot more mixed and confusing. So, which is maybe what we should have expected to begin with. So it's like, you know, maybe Russia doesn't invade, but there is stronger action by separatists in Ukraine. Or maybe Russia only takes limited action or something to that effect. Or maybe this just kind of goes on for a little bit longer, but nothing ends up happening. So this is basically where we're at, is they're shelling in Ukraine. So when we come in here, I see Uzi already pointing it out. Liquidity is relatively shit at the start of the RTH. Yep. They're only putting up thousands. When they're putting up thousands in the treasuries, Mize, look out, okay? This can be opportunities where you can make money because you don't have as much competition now, but the swings are larger, okay? There's a reason why the market makers are all just turn their market makers off, all right? You come over here to the charts. I have a little swing indicator over here. There was a 23 tick swing up in the 10-year treasury. 23 tick swing in over the course of like, oh, how long was that? Over the course of like 20 minutes. That's pretty crazy. Take your typical stop and multiply it by like 4 or 5, right? We are back down to 2% though in the yields. And let's come and look at our charts here. So we can see in ZN, it's pretty volatile. I mean, listen, the thing is, you got to realize these moves right here are like the largest moves that you've ever seen in the treasuries. Okay, so all of these big long bars, those are actually extremely wild and dangerous. Okay. Coming over to the ES still within this range. Yesterday was pretty good, but like they're within this range. So the market is not ready to move past the volatility. Here you can see oil not getting back up to its highs, but you can see the risk premium coming back in there. Natural gas has been on a run. Gold higher, silver not quite, but it's getting there. Copper kind of mixed. Did Bitcoin get hit off of this? Bitcoin did get hit off of this. Interesting, but not breaking the neckline. If they get here below 41, that sure is going to affect sentiment over there. And the dollar index. Well, the dollar is not actually all that high. You're not actually seeing as much risk premium coming into the dollar, which is a very curious point, which I think we should make extra note of. Let's make sure I get this over to the latest time frame. Market maker ache block boy. Wait, what? Anyways, this is volatile. Now I'm so late. Am I really that late? I missed the jobless claims. Well, it's not showing up on my... Oh, continue. No, where's the initial jobless claims? How come that's not listing out for me on Financial Juice? That's weird. Okay, 248,000 versus 218,000. So the jobless claims was a little worse than expected. Philly Fed Business Index worse than expected. Continuing jobless claims so good. Building permits higher than expected. So maybe a little bit mixed. But I'm thinking here for my longer term strategy, I will add a contract. Just because it's at 2%. And I can try and that's kind of the range I've been taking. All sorts of stuff going on the Twitters. Taleb Taleb is an interesting guy because he really understands the statistics better than anybody, but he still seems susceptible to certain biases. He will make snap judgments about things and stuff like that. Mostly negative news, so I'm looking for equities to push higher. I don't know. Now, yesterday, I kind of realized that having something to... I was messing with the fidget cube. That maybe helped me because I took a pretty ill-advised trade yesterday, and I actually did make money on it in the end. I could have made 20. I only made 10 on it. But I stuck to my guns, and I never really felt like I was losing. Something that I think will happen to me is... I'll go on tilts. I can like feel the cortisol in my blood, and I'll get really chatty when that happens. I'll get really chatty. And I think that some of the things that I do where I'm just really able to get into the flow and really read what's going on and understand how to interpret the news and everything else kind of leaves me. And maybe having something to fiddle with my hands will help. So I saw a TikTok about this, and they said this is why you get a stress ball, because really squeezing a stress ball really hard can kind of keep you in the zone. So we might be doing that a lot today. I don't know if I'm going to even pull out the live account, to be honest. In fact, I will switch it off of live here just so that I don't accidentally click it, because when the treasuries are showing less than 2,000, that almost never works out well for me. So the thing is that headlines, there's so much headline risk now in this current situation. Like, the problem is I think from a swing trading perspective, we could probably go long risk here and be fine in a month. And in all likelihood, we could go long risk here and be fine in a month. But on an intraday basis, there's probably going to be so many headlines and market movement that it will be very, very hard to hold to our risk parameters. So I'm probably just going to take a step back unless a story comes along that really, really changes things and really, really makes me feel confident. I will buy a trading coach. I want to trade while laying in bed. It's too much work. Hey, NASDAQ killer, did you stick around for the Fed meeting minutes? That was freaking wild, man. I didn't even mention that when we were going through the charts, man. Oh, yesterday here in the 10-year, right? Oh, you can't really see it very well over here, but like going into the news, they started getting really bearish. and in anticipation of maybe the notes will be bad, and then there was basically nothing interesting in them, and then they snapped back. It was a pretty, yeah. You know what? I hear the dog, that old man. We're getting a puppy in a week and a half, and my wife doesn't want the old dog around. But she doesn't have the heart to put him to sleep. And he is getting whinier and whinier by the day. So I'm going to go take care of him right now. No, it was just the meeting minutes from the last FOMC meeting. So it was basically like, oh, the Jay Powell was honest with us and told us everything that we needed to know in the press conference a month ago. So sometimes the meeting minutes do surprise us, but usually not. So it was kind of funny to see the markets react to it. Okay, so what's happened here? The United States has received Russia's answer to security proposals, according to a U.S. State Department official. According to RIA, Russia has expelled the United States deputy ambassador. I want to trade in the most outrageously laid back position. I don't want to feel like an office dog trained to a chair. I want a water mat. Just get a standing desk, dude. You don't have to be silly about it. My wife was watching this show from, I think it's on Hulu, but I must be like an NBC show or something like that. And it's this redheaded girl. I think she's redheaded, and like she sees what people are really thinking by them breaking out into song. And she basically she works at Apple, and they all have standing desks, and it kind of, to me, it's like kind of oppressive. It looks kind of oppressive, and it's like, oh, it's kind of funny that no matter how good your business becomes, it still is like shackles. Live Monitor says we are not going to war with Russia. Well, a water mattress if there's a drought in Morocco. Listen, I highly recommend the Sleep Number bed. If you get one, put me in as the referral, because they do that, the referral program. Well, we are not above the overnight highs yet, but we're up there. We're up there. Shall we reset our DOMs here so we can see the ridiculous amounts of money we'll be losing here up above this? I'm going to add another contract, I think. Are you calling the lack of a chair a standing desk? No, you still want a chair. The funny thing about I'm recommending a chair, but like what I found is people will get a standing desk and they'll never use it. They never use it. Which is funny. Well, do we think it's happening? Do we think it's really happening? I don't think it does. Let's do a poll though. Today's poll, we should be a little bit more nuanced, right? What will happen in Russia Ukraine conflict? And number 1 will be nothing. Number 2, actions by separatist forces, limited shelling by Russia, or let's say limited action by Russia. Then the next level up there, am I only allowed to have 4 choices? Russia invades Kiev. That would be the top one. The worst it can get is Russia invades Kiev. We're going to say limited invasion by Russia invades select regions. Let's just say limited access. We'll put those. So like separatist forces shelling each other. That's basically what's already happening. So we're already to level 2, right? Kiev was not Russia's. It was always in Ukraine. I'm gonna be squeezing. Can you hear that? So they're just going to do multiple limited incursions because they know Biden won't be able to tell the difference. Right. Well, like that's the thing is that if you think about what was it? Well, the last two Russian invasions, let's say. I'm sorry, that was a little loud. The last two Russian invasions, it was never the Russian army that came in per se. It was always like freedom fighters. It was like Russian backed militias that went in, you know? And it was really was the Russian military, but they give it plausible deniability, right? Technically, they're already there in Ukraine to that point. It's just that this time Ukraine didn't just roll over like the other regions did. I don't know, don't care. All I know is liquidity risk is ridiculous, and I probably won't trade today. Yep. Yep. Unless I get a really dovish headline, like something comes over the news wire that there's some ceasefire and Biden says we no longer believe that Russia is going to attack and yada yada yada. It would have to be really good to get me to try and take a position here with a live contract. I will add on to my longer term position here. So I took one at 06, right? Yeah, and I'll add another one here. And if it goes further, I'm probably take another one. This one, though, I think that will only take it from here to here. My eye is twitching. I don't know what the deal is with my eye, but it's tired. Can you tell? Can we see it on the screen if I could zoom in here? This one right here. It's not happy. This is the eye that was watering a little bit more, and I felt like maybe I needed to change the contact. Well, it's fine right now, but I can just feel it like feels tight. Needs to relax. I don't feel stressed out, and I haven't felt stressed out over the past 2 days. Maybe I didn't sleep long enough. I mean, I went to bed maybe an hour later than I would normally. Putin's cap says build back USSR. What? I just keep drawing this scenario in my head where I get into a trade and it just shakes me off like dirt. Well, it's what would the trade that you'd be taking right now be short though? I think if I had to take a trade, it would be going long or short-term trade at least. Russia expels Deputy U.S. Ambassador Gorman. Okay. I've learned the hard way. I have too, right? Well, I don't know if we've ever really taken trades in anything quite this silly. The one I can remember the most, the one that I was the most embarrassed about was the Brexit thing. Like when they finalized Brexit was really going to happen and like they passed all the laws and all that. There was a lot of volatility and while I had some good insights into what was going on and everything, trying to trade it was just very ill-advised. And I really missed out on some really good opportunities after that because I burned too much risk trying to trade that one big event. Right? So And I feel like this is probably the same situation. Like when this Ukraine situation is done and past, I'm sure there will be some really good opportunities for us. So it's best for us to not become one of the people that get washed out. You can tell, like when the liquidity declines. I don't know. Maybe it's somebody just turning off their robot, but uh, when it the first time that I really saw polling like this, back in like what was it, February, March of 2018, was it? I think, right? That like slow motion week long flash crash, man. Somebody went out of business there. There was probably multiple large futures market makers that are just not with us anymore, I think, because it's not like it just came back. The liquidity didn't just come back either. It slowly built back over months and months and months, which says to me that there was somebody that was putting like 1,000 contracts on there, 500 to 1,000 contracts on at every price that just is gone, and they had to be replaced, you know? So let's not be that person. But maybe that's why they're being so volatile here, is because they haven't killed me yet. They haven't killed me. I survived. I've actually done pretty good the last few days. Kind of gotten away with a couple of things that I probably shouldn't have gotten away with. And they're mad. They want their money back, and they're trying to thrash it all around to get me to trade, and so that they can get it back. Like, come on, Seth, look at this volatility. Don't you want to trade it? Don't you want to trade it? Same with Uzi. Uzi has a lot of their money. Come on, Uzi, don't you want to just take one, just one little contract long in the ZB? It will be, you could make $1,000 here. Come on, ain't no thing. The risk isn't that high. Your stop will hold. There won't be, it's not very liquid, but we promise that we won't give you more than a tick worth of slippage if you put a stop out there. All that for you, micro sim trade, yeah. Negatory. My micro treasury trade, right? Not that I made $30, and now the entire market is embroiled to try and get $30 back from Seth. It's 100%. That's what it is, guys. But you see, it's not the $30. It's their pride is what it is. They just having been beaten, they had all the tips. They got the inside, probably, Biden is feeding them inside information and everything like that. And then they get beat by this clueless, no-name futures trader on YouTube that is constantly making degenerate risks, taking degenerate risks on and everything. But this time he beat them. And they just can't let that stand, guys. You can't let that stand. Oh my gosh. It reminds me of have you guys watched Uzi? Have you watched Jack Reacher on Amazon Prime? It is so good. It was actually more than 30. I had a $100 swing in the past week. Like, the account was below 500 and I got it back above 600. Dude, the Jack Reacher series on Amazon Prime. I keep wanting to say Netflix. It's on Amazon. It's on Amazon Prime. The Jack Reacher series on Amazon Prime is so good. It is so good. You haven't watched any TV show made after 2012? Wow, that's dedication, man. I still watch a fair amount of TV, I think, but you know what it is I don't think I would watch very much TV on my own, but like that seems like that's all my wife knows how to do. Watch TV and read Facebook Oh, she reads too much Facebook. You know what happens with her on Facebook is she gets in these stupid groups. Like she'll have some sort of interest, like she wants a tummy tuck, for instance. She got pregnant and then that kind of put the kibosh on that idea. But she was looking to get a tummy tuck, so she joined all of the tummy tuck groups on Facebook and like spent way too much time reading those. Or for a while she was doing, I think it was for a while she was doing keto. So she would argue on keto groups. I'm like, okay. This is how it gets you, dear. This is why Facebook is bad. She's like, yeah. Just do a liposuction. No, it's not. Hold on. This is talking. The squawk is talking. ECB's Lane saying stuff. Is the stream buffering for you? I'm not dropping any frames or anything. That's kind of weird. Option D, my country's president will piss the hell out of Putin until he just changes his mind and attacks Brazil. What do we got here? Well, out of 8 votes, 75% of you think nothing, and 25% of you think that Russia will invade select regions. But nobody thinks that Russia will invade Kiev. Anyways, so my wife, after I think it was after we got married, developed a thyroid issue. So she gained some weight because of the thyroid. I wouldn't say that it's like to ridiculous levels, but I would say probably to like obese. But it's like no big deal. Not to me. But so her health is just not necessarily what she would want. So that's one side of it. But like she's still kind of the mind that eventually she's going to be able to work out a little bit harder and take care of it. Oh, by the way, we need to take a contract there, right? But that's not the point. But just from having the babies, she's got like a little fold of skin that just is kind of there and doesn't. So she wants to get rid of that. So the liposuction wouldn't do anything. She needs to cut the skin off. But I think she wants to get fit first, and and I think that she can get a lot more healthy. And I would like her to be able to work out with me again, because that's kind of how we started, was working out together. But at the same time, I also realized that because of her health, that she can kind of only go so far, right? Because she just only has so much energy from the thyroid. But it's and an older me, it would have really bothered me, but now I'm kind of like, don't really care, because like the thing is I realized that the only thing that really mattered to me, like the thing that I get out of the relationship, is the emotional stability, and any other emotional stability in children. And so like these other things that maybe people care about, I just don't care about anymore. But she does want to get one. At some point we'll do it. It must be on your end, because I'm not getting any dropped frames. Well, it could be on YouTube, but it seems like my network is fine so far. And YouTube says I have an excellent connection. Well, I played that move pretty well. Was able to take a contract off. It's normal now. Yeah, it's probably just a limited thing on your side. I probably went into too much detail about my personal life on that thing, but what was it? We were talking the other day about, well, I don't know if her kids will be into math yet or not. She's like, you were talking about your family an awful lot today. And I was like, but just because she can tell that like I'm talking about us, but she didn't know what I'm saying. So it sounds to me like what the ECB's lane is saying right here is maybe somewhat a bearish or hawkish. Got some size flowing through 06 half to 07. Yeah. There is a little bit of an iceberg there, isn't there? But you know what that one is almost any time that there's a breakout, if they come back to the breakout, you'll see somebody trying to hold the bid there. I don't know if that's something that really works out for them in the long run, but there's always people trying to hold the bid. It's just the way that it goes. Let's see here. I saw something here on my stream, but it was on the streets tweets. Elon Musk says Charlie Munger was a Tesla bear right from the start. I was at a lunch with Munger in 2009 where he told the whole table all the ways Tesla would fail. You know what, though? I think that with the way that they invest, Tesla is still a bad investment. like in all seriousness, no, I usually stick to ZN. Uzi usually does ZB, but I think when things get really messy like this, ZB becomes a little bit, a little bit too much risk. So I could see why he might be watching the 10-year a little bit more today. Like this kind of a situation is where the ZN can be really advantageous to you, right? Because good grief, look at the ES. Like if you think that the liquidity is bad in the 10-year, look at the ES. They're only putting up like 11 contracts on the inside. Oh, you've been doing ZN the last few months? Well, the ZN is the most liquid instrument in the world. So, there is way more volume in ZN. Way more. And all of the order flow traders, we prefer ZN, generally speaking, because the size gives you more reliable signals. Whereas the ZB has a bigger tick size. So in an action like this, it will really hurt if you take a loser. Like one loser is $500 in ZB right now. I think that there's still a lot of headline risk. So I'm not going to take a live trade, but I want so badly to take a long at 2% in the micro 10-year. I want so badly. I might already be too late for me to get filled, but the way these flows are flipping back is pretty aggressive. Okay, TASS reports that Putin has launched a series of meetings to prepare a message to the parliament. It could be linked to the option for Putin to recognize Luhansk and Donetsk or the general escalation in Donbass. He will either pressure Ukraine on Minsk II or further escalate. No, I'm not going to do it. This could get so much worse from here. Russia insists on withdrawal of all U.S. forces from Central and Eastern Europe. Like right now, from reading the headlines, I think I am still in the nothing camp on our poll. I think I am still in the nothing camp in the poll. But what the headlines are making me feel, like what the emotions are saying, is that Russia is going to invade Kiev eventually, and that they just delayed it by a day to make Biden look dumb. Right? Buy it, Seth. That was a test. Okay, cool. Well, look, I would have made like $10 if we'd done it, right? I don't know. I'm sticking with it. Do you think that they could test 127 this week? That would be fun if they did. Be fun if they did, because I wasn't sure if we were ever going to see that price again. But given the current situation, very much possible, isn't it? Okay, so I'm supposed to take 050 if they are so kind, because that is the buyer's average position in the 10-year. It's different in the 5-year, and the 30-year is already past it. So that's why we're taking profits. Maybe we need to do it at 050, 5.5. It doesn't look like it's giving it to us. There was like decent offer iceberg, but why do I not have that pulled forward? Okay. In 2020, I lost a couple grand, and I remember that. Oh, thank you. Yeah, dude, that trading the beginning of the pandemic was the biggest mistake I ever made. Because you know what, like after the pandemic, and I was trading on Sim, and I was trading some different methods, and there were methods that I eventually determined did not work. But for that first month or two, it was like, no matter what I did, I just could not lose. What the fuck? What the fuck? Okay. So the headline that triggered that was Ukraine's defense ministry saying that the shelling has stopped since a certain time, as of 1300 local time. Okay, so that one, that was a robot. That was a robot trading it, a little what is the word? Impulsively. I don't know if that one holds. Skadoosh. Talk about it. That was like an 8-tick slip there in the treasury, wasn't it? So whoever hit that, look at that. I mean, it wasn't like the liquidity all pulled either. Look at how much volume traded there. They took it down, and then there was big offers trying to push it as well. But now they're getting pressured. Do you think that those guys are going to puke higher? It's kind of hard to like sit down and say, well, because this happened, we're going to see this happen. But somebody definitely added a lot of shorts there and ate it all up as it recovered. So it definitely sets up an interesting situation, even though I don't necessarily know how it's going to turn out. I'm actually surprised that they're still putting 1700 up on the book. And look, the bids have 2500 down at the bottom there. So you can see where the hole is now, right? It's kind of rare when the liquidity holes really become visible, like in the actual latent liquidity. You can see it all the way to here. That whole area is just a giant gaping hole that price can move back and forth across easily. This is intense stuff. I'm glad I'm not in a trade. I don't know. So with the way that I've been trading this, If I had traded this, well, actually, if I had traded this, I would have made $20 and I could have taken it off there. And I don't know if I necessarily would have. So I don't know if over and down in here, if that really would have made such a great trade. But this one is great. I played that one awesome. I wish I could move markets. No, you don't. No, you don't. It's harder. It's harder, I promise. Remember, and by the way, if you guys have not seen the stylized behavior of markets video on my channel, you've got to watch that. That video, and then the one that we're coming out with either this coming Tuesday or the week after. I haven't quite decided what I want to do yet, but I will probably depend on how far I get on the weekend with editing it. And I do need to, I was reading through the script, I do need to change a few things. Because I didn't add, there's a part about, well, this is how, oh man. Okay, so here, let me pull it up. Now I won't pull it up. In the paper that Jean-Philippe Beauchat wrote about inelastic markets, towards the end of the paper, he says that, you know, this also gives us some insight into perhaps how quant funds are making money. Is they're finding aberrations in the order flows because it's the orders that you have to predict. And I didn't realize it when I read that. I was just like, that's a pretty good theory. But now I realize, like, oh, this guy co-founded Capital Fund Management, who runs the best running CTA fund with a 5-year performance. They have the best 5-year performance of a CTA fund with over 500 million under management. Okay. So he's basically the best there is at this. Like, it's not just that he publishes studies and stuff and they're really good stuff. His fund is the best performing funds. Well, I mean, they have multiple funds, but it's, you know, one of those funds is the best performing fund out there in the space that we're looking to make money in, right? You think he knows how quant funds make their money? I think if anybody knows, it's him, right? And he's literally telling you right there in the paper. He's literally telling you there right in the paper. Oh, we find aberrations in the order flow and we take advantage of those. Probably more on higher time frames because it's a trend following strategy. But yeah, this is what he does: is they watch the flows on a higher time frame, and they take advantage of those. And I'll tell you the other thing is that one, like, it started out as a trend following strategy, but like they've really got it complicated. There's a lot of mean reversion and stuff in there as well. And so it is just incredibly consistent, supposedly. Like the returns are not correlated to the S&P 500 at all. COT data, maybe. I don't even think I don't even think that they look at it like that. I think what they're doing is they're creating a model that's modeling where money is moving to and from. So it's not even COT data. It's more like this much money moved out of this space and moved to this space. And when you start analyzing that, you'll find some sort of statistical aberration in that tells you, okay, when you start to see this happen, it's likely going to show up over here. So we want to go and front run that. You get what that kind of makes sense? That's what I suspect they're doing. But he didn't go into that much detail about it. He just said that they're using order flow data. And there you're saying, who was it that was saying that just a few seconds ago? Yes, because these fellas buy order flow like Citadel. Ding, ding, ding. Exactly. Citadel is taking advantage of it through options. Which, when you look at how much, because Citadel is the top performing hedgy, right? You look at how much money they're making. Okay. And then you realize that almost all of Citadel's profits come from trading options and from market making Robinhood orders, right? Kind of makes you wonder, do I really want to go over and trade those? The longer term order flow data just loses causation to future flows. Well, but what I'm trying to say here is that I think that when I say order flow, sorry, Feds Bullard is talking. And Bullard says we're missing our inflation target by 300 basis points. So it sounds like he's going to come in here and be in hawkish as well. That's not trading, rather gambling. Okay, so I think that when I say order flow, people think I mean, oh, I saw a lot of market orders here and an iceberg here, and that means that X is going to happen. No. So remember, market is more technically efficient than it is informationally efficient. The market is more technically efficient than it is informationally efficient. So if you're watching the DOM and it's a pattern that you can see on the DOM, there is probably going to be some sort of equalizing factor in it that you can't see right away. Like if it really does tend to do a certain thing in a certain situation, it is either specific to that regime or it just doesn't work at all when we're in high risk events like we are now. Okay. So instead, when I'm talking order flow, I'm talking about doing the exact same sort of a thing, but instead of saying, okay, there was an iceberg here, it's going to go down to here. Instead, what I do is I come in and I say, okay, on this day, there was this kind of order flow in the treasury. And that supposes that there is interest rates are rising and that there's going to be a lot of downside momentum. And so I could have been just holding a short on the treasuries for the last 2 months. You get what I'm saying now? So it's like order flow on a swing trade. But a swing trade being, or actually I wouldn't even call it a swing trade. It's like using order flow for a position trade is what it's like doing, right? Because they're trying to do just the technicals on the short time frame. It's not very reliable. So you step back out and you're taking a trade that lasts several months, if not the whole year, trying to take advantage of the tendency for commodities to run. So you're using order flow to run a CTA strategy. That's what I think they're doing. But I think what I want to do, hold on. Bullard says that he doesn't think that raising rates would risk a recession. I guess Biden is speaking. The risk of a Russian invasion is extremely high. Has requested that Secretary of State Blinken make a statement at the United Nations on Thursday. Feds Bullard, by July 1st, a good objective would be to raise the funds rate by roughly 100 basis points. So he is still pushing for to be aggressive and to be up at 100 basis points by July. Markets have already priced in a lot of information. That's true. There are strong indications that they are ready to invade Ukraine, says Biden. DOS attacks being thrown around like footballs. You talking about like the Ukrainian websites have been under attack for the past 2 days? My wife and I have been playing a Russian mobile game for like the last 8 years called Battle for the Galaxy, and their servers are gone right now. Wow. Alligator says, I don't see how to scalp this market, but trying to catch upsides. Don't want to scalp short even when there's trend, so I'm going to lose a lot of action today. I'm more interested in what happens after this. Alligator is a trader who posts in our Discord. He doesn't, listening to me all the time on YouTube is a little bit too much for him. But he has been with us on the Discord from the very first day that we made the Discord, and he's kind of like my European counterpart. So he does have he has more moderator privileges on the Discord than anybody other than me. So he's a good trader. He really knows the treasuries. He's really good, and he's shown me some results that were really, really impressive. That doesn't mean that he's like always done well, but he's shown me some months that did really well. So he's a great trader, and he posts a lot of really insightful stuff in Discord. So yep, he's probably not listening, but I really appreciate the work that he's done. Discord would not be what it is today without Alligator. Bullard is saying a lot of stuff right now, so this is a pretty fraught moment. Rand Paul complaining about Fauci right now. You want to read it? One reason that so few scientists disagreed with Fauci is quite simple: the power of money. The government spends $5 billion a year to support infectious disease research through the agency led by Collins and Fauci. Researchers are disinclined to run afoul of Dr. Fauci, as future grant funding may depend on the director's approval. You know what I find so interesting? As I've spent a lot of time on this YouTube channel over the past year or so, really trying to push scholarly research, because empirical research is a really big step up from what most retail traders do. Most retail traders just look for somebody that they think is being successful and try and copy what they do. Okay. And they never ask for empirical evidence. So I come back and I said, you need to base your trading off of stuff that you can prove in empirical research, like actual data to show that this is a tendency that the market has, right? But there are problems with empirical scholarly research too. And then the primary problem being that what gets published is probably not the research that would be most useful to us. So like this stuff that we've found that is really truly like the best information that we have. So like the inelastic market hypothesis, I'm sure that at some point in the future there will be another theory that comes along that's better. But it's like, like there was I think of it as like there was the efficient market hypothesis, and that kind of went away. And people came up with auction theory, and I think that the inelastic market hypothesis replaces auction theory to some extent. And some point in the future, they'll probably find something that's even more a better fit to the data that kind of fixes some of the edge cases that maybe the inelastic market hypothesis can't fix, right? So it's a theory like that. But apparently, they've been having a hard time getting recognized by the top journals. Like this stuff gets published on archive because the big journals don't take it. And you see that in medical stuff too, right? That or like climate change. Like if you have a study that doesn't go along with the dominant narrative on climate change, it's like there's no way it's going to get published. I think that the inelastic market hypothesis is a better explanation of the way that markets behave compared to auction theory. So how would I describe auction theory? Auction theory is basically this idea that markets will find a balance area, and then they will try and auction a certain way. They will auction until they'll auction up until price has gotten as high as people are really willing to buy, and then it will either find a new balance there, or it will come back to the balance area that they had before. And that's basically what how market auction theory approaches things, right? And I'm saying that that there are some problems with that. And once we realize that it's orders that move markets, that large meta orders are very dominant factor in where the markets move, and a dominant factor behind trends as well. Um, and we look at the inelastic theory of markets, then we realize that, oh, the reason that it moves like that is because orders have such a dramatic effect on liquidity. So really, trying to come in and say that like this area where there was a lot of volume, right? Like in this particular instance, if we're looking at it from an auction theory perspective, they would say this is balance because it's the point of control. And if we have a move, it'll go, and we would look at today's action and we'd say, look, see, here's the balance area. They had a test higher, that got rejected. They had a test lower, that got rejected. And now they're back to balance. That's what they would say. But when you look at it from an inelastic theory of markets, you realize that that's actually poppycock. What's actually going on is that this is an area of low latent liquidity. This is an area of low resting and latent liquidity, and that constrains price in that range. And these large moves that you had up were large meta orders. In this particular case, news-driven meta orders of a large number of traders all trading off of the same piece of news, moving price up and down. And the reason that they snapped back to this liquidity hole is because, they moved up because of all of the orders, but then they fall back into the hole. Yeah, I think market auctions define value and have inelasticity when trying to find value. No. Well, so the key thing, that I think is wrong about auction theory is the entire idea of value. There is no value. Like there is a price. I think that there is a theoretical price that is the correct price if you had all available information. Okay, if you knew everything about the market, I think that you could create a formula that would represent the correct price that asset should be worth based on currently known information. Right? Based on currently known information. And market will almost never reflect that price. Markets will almost never reflect that price. The orders are too strong. Why don't you pay $100K for a Toyota? No. Okay. So here's the fallacy in that, Kyle. You're trying to apply the standard kind of like economics of like supply and demand to a limit order book. That's where it falls apart, right? So what we're saying, or what we have learned rather, what the research suggests is that the way a limit order book works actually creates this behavior that's opposite to the traditional supply and demand curves that you would see in a traditional marketplace. Does that make sense? I mean, I would have to go into a lot of math to explain why that is, but that's the general conclusion, is that markets are inelastic, right? So, man, my throat is really dry today. Market elasticity is essentially how supply reacts to demand and vice versa. So if the price of something goes up, demand will decline and supply will increase, and it will until it reaches a new equilibrium. So if something happens, say we're in the oil market, for instance, oil would be a great example. They come in and they say, okay, oil is worth X. And then there is a geopolitical crisis, which makes the demand for oil higher because the demand for oil increases because they're afraid that the supply will decrease. There will be lower in the future, right? Under a normal functioning market, if all of a sudden people start buying a bunch of oil, then all of the oil producers will come in and say, oh, people want a lot of oil. We should be able to produce more. And so they increase the amount of oil that they're putting out onto the market until it reaches an equilibrium point and price stabilizes again, right? That's like elasticity, okay? A limit order book doesn't work that way. In a limit order book, you've just got the orders that are placed out there and you've got the orders that are coming in. And when those orders come in, they will have a tendency to move price up. And then there's a post meta order impact. So it kind of looks like this. But Bullard has started speaking. He said a lot at the beginning. I haven't heard anything more. You did sound hawkish, but the market hasn't reacted too much. But it doesn't happen because of agreement, Kyle. That's I'm saying two things, and both of those things are okay. So one, the market is not informationally efficient. So the current value does not reflect all available information. But I'm also saying that stabilization around a price or a lot of volume trading at a price does not represent agreement. Because that's what you're saying, right? Value is agreement. And I'm saying no, value is not agreement. That's not why it happens. That doesn't make any sense. Why would I want to trade something if I think that the current price is correct? Think about that for a second. Don't you want to buy it if you think that the value is too low? The poll is in the video. So you want me to close? You can actually right click on the poll and just close it. We've got 23 votes though. Now we can end the poll. Put too much moral judgment on economic words. I'm okay. So you're saying that I don't 100%. I'm not 100% sure what you mean by that, but it's so far off kilter. I don't think you understand what I'm saying. Oh, I wouldn't want to do that. I'll close that. What does it represent? Okay. Let me try and back up a little bit. If you think the current price is fair, why would you trade it? That makes 0 sense. Right? Isn't the correct thing to do to say current price is too low, I'll buy it when it's low and then take it off when it gets back to fair value? Isn't that the way that it's done? Why would I want to trade it if I thought that it was fair? Why is it that seeing a lot of volume at a certain price means that the price is fair? Easy. I wouldn't trade at current value. I trade at prices away from value. Exactly. Okay. So then why does there so much volume in the middle? Why is there so much volume in the middle? Right? So, I'll answer that. Okay. What happens is this is where you will look at the Walrasian study. So, what happens is if you do a Walrasian auction, I'm talking about in the volume profile. Yeah. Why is there a price in the middle of the volume profile that has more volume than the other prices? Okay. I'm going to answer my theory on why that happens. My theory is, well, it's not my theory, but I believe that it is the best explanation given the data that we have, and that this is a empirically backed theory about why this happens. Okay. A higher volume profile does not necessarily represent value. Yes, but what causes it? What causes it then? But that statement that you made right there is not what auction market theory says, right? Or at least not the way that the people that teach auction market theory teach it, right? They say, here's the point of control that represents value, right? What causes it? I'll tell you what causes it. So a Walrasian auction, like what is done in the Taiwan Stock Exchange, is an auction where you can only put limit orders in, and the orders are matched every 5 minutes. So you have 5 minutes to put your orders in. At the end of 5 minutes, all of those orders that were put in will be matched up with each other. Okay. I mean, that's from last time I was watching. That's what Futures Trader 71 kind of always says, is that the point of control represents value, even though I think he understands that the value isn't necessarily agreement. Okay. Let me get through here. Sorry, the new squawk is talking a lot in my ear here. So I'm trying to explain this to you while also keeping an eye on what the headlines are. Okay. So a Walrasian auction is an auction where you can only put limit orders in, and the limit orders, so there's a 5-minute time limit, and at the end of that 5 minutes, then the orders are matched up. Okay. So what happens when you do that? There's going to be people that want to buy, right? And the closer to the current to the current price, the more people that you're going to want to see buy, right? So you're going to see a distribution like this of people that want to buy, and then you're going to see a distribution like this of people that want to sell, right? And what is right here in the middle, this little shaded area right here, are the people in the Walrasian auction that get filled, right? So everybody, oh, I don't have the text to speech on right now. Okay. Anyways, so what is this right here? These are fills. Okay. These people got filled. So if we were to look at a volume profile at this point, you would see something like this, right? This is the point of control right there in the middle, right? With me so far? Okay. Fair enough. Where there was a lot of volume filled, okay, there's that middle area, okay, where there was the people that wanted to buy and the people that wanted to sell met each other. So it wasn't that they agreed with each other, because why are you buying it if you agreed with the price? Why are you selling it if you agreed with the price? It just so happens that was the area where there was the maximum number of matches. Okay. Now, we had this little curve here. We had this little curve here. Okay. This was one auction. Now, what's going to happen next auction? Is it still going to be like this? Is it still going to be like this? No. Why? Because these guys were already filled. So 5 minutes from now, you should expect that it will take some time for more people to want to buy in that location, because all of the people that wanted to buy and sell at that location already did it, right? So they go and they do the math of it all out and everything like that, and they kind of show that this explains why there's a square root law of meta order impact. It is basically this, it creates a hole, right? It becomes an area. So now you've got, here's the orders, but next, well, it won't look like that, right? We said, here's this one, it'll look like this. I'm going to try and draw it really well. Next time around, it's actually going to be like this. There's going to be fall right there, because all of the people that wanted to trade there already did so, right? And this leads to this situation where if you try and buy it up, you run into more liquidity this way. If you try and buy it down, you run into more liquidity this way. And so you get stuck in this location. Not because people agree or because they think that this price represents something special, but just because it just so happened by random chance, frankly, that was the spot where people agreed and that the most volume traded, and it becomes a hole then at that point. It becomes this divot that the latent liquidity is never really very high, but because they can't get out of that zone, and that's just the price that people have to pick if they want to trade, and so they end up trading that price, and then it ends up becoming the point of control for the session. So, in effect, the point of control can be random. The point of control can be random. People below it agree. Well, but no, they don't agree. They just want to buy it. Okay, so that's another fallacy, right? It's interesting. The more I'm going through this, the more I'm realizing that to really understand this stuff, you have to have gone through you have to go through the whole process. So why are these orders submitted? Right here. What you're saying, they want to buy it there because they think the price is too low. Okay. I have an alternate situation. Maybe they want to buy it there because they're a index fund and they had more people buy in than took redemptions that month, and so they have to buy a certain amount of S&P 500 futures or companies or whatever the deal is to have them to reflect the index. Otherwise, they're underinvested. And you see, they don't care what the price is. They just need to be long. They just need to buy a certain amount, right? So they're going to buy wherever it is. And if this first auction, they're putting their orders in right here. And with this next auction, they're like, well, I'm going to put my orders in at the current price because that's where I'm most likely to get filled. Right? It has nothing to do with what is a reflection of fundamental value or anything. It just happens that that's where those two forces meet up. It tells you nothing. It tells you nothing about what the market participants think about the price itself, right? Whether the price is too low or too high. This is the thing that I'm trying to say is that the price is BS. The price, it's a random thing. What it is right now is not any kind of fundamental reflection of what the market thinks of value of anything. Okay. If you want to talk about what is value for the market, you're going to have to calculate it using other metrics, and you're going to get a price that is usually very far away from where current price is. And you can trade off of that. Like, that's the way that Buffett makes his money, but you should never expect it to be anywhere even close to the current market price if you want to talk about value, right? Yeah, this is where the boobs reference comes from, right? But they don't want to buy it because they think that the price is too low or the price is too high or anything. It can be just because of some systematic strategy, right? So that's where I think that these kinds of constructs they get wrong. They don't agree. They just want to buy it. Is exactly what agreement is. They're willing to trade below the hull. They provide liquidity. They're also so well. But they once the hull forms, the orders just go into the hull, right? So the thing the next step of this is Omgren Chris. Okay. So what Omgren Chris does is they come in, they say, if I have a certain time period, I know that I need to be out of my, I know that I need to execute all of my orders by this period. Maybe it's because I'm making a bet on an economic number and I need to be into my position by that economic number. Or maybe it's that's the end of the month and I need to buy all of the shares that I need to by the end of the month. Then how do I split that up? Right? If I have more orders that need to go through than the market can handle at any one time, I know I have to split it up. How do I split it up? And Omgren Chris is a method of determining what is the optimal schedule to use to trade that. And there are 3 inputs that you can put into it. One of them is what the current market trend is, like if we're moving, or what your expectation is that it will move up or down. Okay. One is how long you have, and another one is how much risk you're willing to take. Okay. So if we say that the market is going to be neutral and that we want to take the minimum amount of risk, then what Omgren Chris states is that you want to do it like this. You want to trade your most volume here at the beginning and size down as you go. Okay. And what they do, the way that you split it up is what is this size that you're going to do is going to be based on what the order book can handle. So what they do is they trade until the order book becomes stressed, essentially, until that liquidity hole forms. You trade it until that liquidity hole forms. Then you're trading in that liquidity hole. When the liquidity hole has healed, then you're going to bring in the next large part of your meta order, right? That's why you'll get in market trends, you get this. This is what causes this in market trends. Seeing this doesn't predict that it's going to continue going up. That's a fallacy. But seeing the pattern doesn't mean that that's what's happening. But when this happens, that's why. That's why. It's because of Omgren Chris, essentially. You trade until you put the pressure on the order book. You back off. That causes the post meta order impact pullback, and then you bring in the next leg of the meta order. Yeah. And here in this situation, is this guy saying that this means something fundamental about the price? No, it means absolutely nothing about the fundamental value of price. They just means that they have to buy. It just means that there's a buy order coming through, right? So I'm not going to make any fundamental conclusion about what is a right price or a wrong price based off of what I'm seeing out here in the market. Like if I'm looking at the treasury and I want to say, what is the correct price for the 10-year treasury? Is 2% the correct price for the 10-year treasury? Or is it below that or above that? I'm going to calculate that by looking at what the Federal Reserve expectations are and, doing all of these calculations by summing up all of the coupons and everything to find out what the correct price actually should be. And then are we above or below that, right? But I know that what the current value is does not necessarily mean anything about whether people are going to buy or sell in the future. For that, I have to look at the flows, right? So instead, what I want to do is I want to try and predict the flows. So how do I predict the flows? Well, I can come in and I can say, based on the amount of money that is currently being managed by risk parity funds, the market moved this way, and this is what they're going to have to do to be able to rebalance at the end of the month. And ergo, I should see X billion dollars come into this market and buy. And that I can predict how much order flow is going to come into this market from risk parity funds. And then I can come over here and I can say, there are people that need to buy bonds just because they're a bond fund, right? So how much money is that? And what is going to happen with the primary dealers when they come in and they do the auctions and this sort of thing, right? How much money was contributed to 401ks? Are there insurance companies out there? There was a big disaster. Some insurance companies have to sell some of their bonds to be able to pay for the disaster, right? And I can take all of these different predictors of order flow and combine them together to create a model of how much money I'm going to see into the market. And then because I know what the impact that these orders are going to have on the market as they come in, I can then predict where we're going to go. Right? And that prediction is not telling me anything about fundamental value or value informationally of any sort. All I'm doing is saying, these are the orders that are going to come in. This is the impact that they have on price based on the current market conditions, right? So do you see now where there's some flaws in auction market theory? It's not like auction market theory was like dead wrong. It's just it's not as accurate of an explanation for why the market moves and being able to predict what's going to happen, right? Auction market theory doesn't come in and say, oh yeah, there's a lot of order flow that is really just, for all intents and purposes, random or has nothing to do with fundamental value, right? By the way, take one there. Again, and this time, this one, I'll do it at 126. Be a little bit more aggressive on this one. If every US open attraction prices to it, I would buy an inverted lollipop to my cat. I hate those sideways and up moves. It's my stop every time. Yeah. Yeah, maybe a little balance here. So one of the things is when I say balance here, well, it only just means that the order flows are balanced, right? That the amount of buys and sells are equal. And it's probably not even balanced. It's probably just like, so another way of saying it is like if we really are balanced, if we really are at value, then like there's no reason to trade. So like if I come in here and I see that the market is quiet, it's like, okay, well, they either like a current price or they're waiting on something, right? So you guys went you were arguing with me a lot and then you got super quiet. So I don't know if that means that you see it now and you agree with me and there's nothing more to say about it, or if you still disagree and you just don't want to argue about it, or you don't understand and you don't even know what to say. So give me some feedback here. What do you have any other questions about that subject? Because it's the most important subject. This is why we're here, is to help more traders understand this reality of markets and to dispel many of the traditional assumptions that people make about the way that markets should move that are all based on a theory of markets where price is elastic, where there's some sort of value area and that if they get too far away from it, it will slow them down and snap them back. It's really hard to argue using a keyboard. But the thing is, and again, like another problem with auction market theory is that auction market theory is a trader's theory, right? It's like, this is the way that I see price move, seems to me. And so this is my construct of why that's happening to try and make better trades, right? And one of the big problems that we have in trading is that really being able to quantitatively analyze what the market is actually doing is very hard, because the reality is that most market movement is random, right? But we were able, with some very large data sets and getting some information from the actual trading firms and stuff like that, just showing us what they were actually doing, we were able to understand what they're doing, what's really going on. And we've created a new theory that is based on the observations from serious quantitative research, right? Like, I didn't come up with the inelastic theory of markets. This is what the top researchers in our field have essentially concluded. Friedman used auction market theory. I would maybe separate those two then, because Milton Friedman. Well, okay, so first of all, Milton Friedman wasn't right about everything, but second of all, I think that you would have to differentiate between like the economic theory and like traders' application of it. Like, so for instance, there's the inelastic theory of markets, right? Which says that essentially orders have a really large impact on price, and that the current price doesn't really have any real reflection on what fundamental value is, and that moving away from that fundamental value, it doesn't create some sort of pressure for it to come back. The market just balances back out when the order flows balance out, and that's the only reason why price balances out at a certain place, right? So the meta order is done. The way that Seth will apply that theory is kind of different from the actual inelastic theory of markets, right? But the other side of this is that, again, like, there is market elasticity is a thing, right? But that's like in a more general free market economy where people go to the store and buy stuff, right? It's not the same thing when you're talking about buying stocks on an exchange, is what they're saying. So we all try to apply this assumption about elasticity, because it is a thing in markets, right? It's just that the way that the order book works does not create elasticity. It does the exact opposite, because the market is so what is the word that they use? The markets are actually so illiquid. The impact of new orders is just so important that it overwhelms any of those other economic factors that should normally exist. And what becomes the dominant factor is the mathematical properties of how an order book behaves, which is that when the liquidity becomes too strained, it creates a liquidity hole, which actually kind of blunts the impact of orders, and that's why the impact of a large meta order follows the square root law. Tops or bottoms or retests make any theory invalid. Price will go to where price will go. There you go. Yeah. Oh, so the inelastic theory of markets gives us, I think, and this is my own conclusion. The researchers haven't said this, but I think it's kind of implied. Like, when I read these things, I feel like that they have an axe to grind against technical analysis, but they're not going to just outright say this is bunk. But I am, right? And the inelastic theory of markets says that, hey, if you formed a double top or a double bottom, who cares? Because the way that the market arrived at those prices means absolutely nothing. Means absolutely nothing that would be effective at predicting what it's going to do next. There you go. New orders are the only way for prices to fluctuate. Yes. Exactly. Like the market maker is not, I mean, they might have an opinion. The market maker might have an opinion, and they might make it easier for price to move in one direction or another. But the objective of a market making strategy is to make money from the spread. And the way that they trade, they account for what direction is going and how much volume is going in, so that they can still make the spread in the end, right? And that means trading against, like if we have a trend update, the market maker is trading against that the whole time, right? So what is actually moving the market? It's the new orders that come in. Well, okay, so you say new orders have a dramatic impact while one person's long position is another person's short position. Right. Okay, so you're correct. You are correct. So I think what you're getting at is, if I come in and I look at the market and I say, okay, there are more buyers than sellers, that doesn't make sense, because there's always an equal number of buyers and sellers, right? There's a buyer and a seller to every transaction. And you could say, this person, he's going long, but that was against somebody else that went short. Well, that's not actually true, right? Because it could just be he traded against a market maker, or trading against somebody that was doing arbitrage or something else like that, right? And so how do you sort that out? You can't sort that out from looking at the order flow itself. You can't sort that out, other than if there is a strong trend and you see that price did move a certain way and that there was a large number of market orders behind it. Then maybe you can say that, right? But even then, so how did we come to this conclusion? We didn't come to this conclusion from coming and looking at what we can see here as retail traders and looking at cumulative delta and seeing that that's what happened, because you can't do that. There's just not enough data. We'd have to be able to look at everybody's positions, right? And so that's how researchers figured it out. Was one, they started and they would go to firms. They would go to Goldman Sachs and they'd say, hey, give us all of the data from the executions that you made. And then they looked and they said, okay, this day, Goldman Sachs acquired an X number of contracts position for this firm. And this is what the impact on price was. And they do that, 100 times. And they see what the impact would have on the market. And they found that it would tend to move it in the direction that they were buying their meta order, and then it follow a square root law, right? And then Bitcoin came along, and Mt. Gox gave a researcher their entire, like everything that had ever happened on that exchange, a data set. And they went through and they looked at every customer and they said, okay, when a customer was buying something. And so they literally looked at 1,000 different meta orders, over thousands of meta orders that had been transacted on the Mt. Gox exchange. And they found that it tended to have an impact on price, and that it followed a square root law. Right? That's how the square root law of meta order impact was found. They had to use proprietary data sets. Oh yeah, I already covered that one, right? So no wonder they included orders were so important. They're looking at orders from Goldman Sachs. Well, but then they look at Bitcoin. It's like the thing that's so cool about the square root law. Like this is really important to realize. This is a law. Like it's called a law, right? Like it is. I mean, it is a statistical thing, but it is as consistent as like any law of physics. If you are a large buyer and you're going to buy something, on average, you execute that meta order 1,000 times, you do all of the math, you will find that your impact tends to follow a square root law. Okay, so that move that we just saw right there was from the UN political affairs chief saying, whatever one believes about the prospect of confrontation, reality is the current situation is extremely dangerous. So I think that the robots or the traders are just blindly reacting to this headline and don't know if it means anything yet. Interesting about Mt. Gox and the square root law. Yeah, the study that you can read about that, it's called a 1,000 meta order analysis, something like that. Actually, I think I have it here on my computer. Let me go look. The UN political affairs chief is speaking right now, and it is having an impact on the market. Maybe I had it on my phone and not here. So now I'm going to go find it. I've searched it many times before. If that's not what I want, that's not it. SSRN will give it to me. There we go. Oh, I said it was 1,000. It's a million meta order analysis of market impact on the Bitcoin. Published in 2014. We present through empirical analysis of market impact on the Bitcoin USD exchange market using a complete data set that allows us to reconstruct more than 1 million meta orders. We empirically confirm the square root law for market impact, which holds on 4 decades in spite of the quasi-absence of statistical arbitrage and market-making strategies. We show that the square root impact holds during the whole trajectory of a meta order, and not only for the final execution price. We also attempt to decompose the order flow into an informed and uninformed component, the latter leading to an almost complete long-term decay of impact. This study sheds light on the hypothesis and predictions of several market impact models recently proposed in the literature and promotes heterogeneous agent models as promising candidates to explain price impact on the Bitcoin market, and we believe other markets as well. I don't know why I don't have this one in my little trove of documents on my machine, but we're going to download it. No, we want to go to documents, reading, learning. Look at how much shit I've downloaded over the years. Scholarly articles. Microstructure, put it in there. Million meta order analysis Bitcoin. Oop, did I not? I clicked cancel there, didn't I? Oops. Now I have to go and do that whole thing all over again. There we go. If they looked at my orders, they would have concluded there is a negative feedback built into the market. Okay, so in this study, we also attempt to decompose the order flow into an informed and uninformed component. So one of the things that they've been finding is that orders have an impact, but the post meta order impact of an informed trade versus an uninformed trade appears to be different. So if like Bouchot did a more recent study where they looked at every major move that they've seen in the S&P 500, and then they tried to correlate those up with a story on the Bloomberg news feed, because Bloomberg has the data to go back and see like every news story that ever happened in the time that Bloomberg released it to the market. And they went and they found that the post meta order impact was different if they could attach it to a news story or not, which was interesting. But the impact was really wasn't that like if it was. I think that there was something to do with like if it was uninformed, it was more likely to come all the way back. But that really what happened was that the volatility decreased. If people knew what was causing the news, the volatility would decline faster than if they didn't know what it was. People were like trying to figure out what was causing it, and the market volatility would go on longer. Yes, that would seem to suggest that there actually is smart volume worth tracking because they know something. Yes, exactly. It's just, how do you separate that smart volume from dumb volume from just watching the market, right? The only way that you can actually know that is if you're smart too, and you already know what the piece of information is. That's why what I'm saying is know what's going to happen. Watch for the meta order. When you see that the meta order is starting, get in, right? You want to tag along with the smart volume, but you have to know that the smart volume is coming. That's the way that I try to do it. Ukraine makes Bitcoin and crypto legal in the country. What the hell? I don't know if that's a legit headline. Why would they be worrying about that right now? Unless somebody was just trying to put out a headline and get out in the news because they know that everybody's looking for headlines on Ukraine. I agree, but I thought you argued against this way that there is smart volume or dumb volume. Well, there are participants in the market that know things is certainly true. It's how that impacts the market and what people think about how that impacts the market. Sometimes they'll get details wrong, right? So order flow will have an impact on the price regardless of whether or not it's informed, for instance, right? And you don't necessarily just want to trade it because it was informed flow, right? But I do want to predict the flow. I don't want to try and say, okay, I saw a little bit of flow here, that must mean that we're going to buy. Because essentially, if you try and take that approach, which sometimes I fall into the trap of doing, then what ends up happening is you are always looking for everything to always trend, and then you'll never get those trends, right? That's the fallacy that you fall into with that sort of a thing. But that's why you really have to be predicting it, and you really have to kind of have an idea. I think the thing that I'm really missing is that I don't really have a very good idea of how much volume is actually going to see from some of these meta orders, right? Like if I was working for Goldman, they would go in and they would say, okay, yeah, we are going to see some end of month flows today. This is how much end of month flow we should expect to see. So, and then you can actually try and make a trade out of it. Whereas what I do, I just know generally what direction they should be going based off of what the expected flows are. And it's really difficult. And I just kind of have to hope that it turns into a trend and then take it off when we get into the liquidity hole. Some FOMC days sometimes have fantastic volume signals. Those are precious. Yeah. But here again, this is where it's like details matter, right? Why we'll see moves on FOMC days. Why? Because what they hear at the FOMC, not only are there a lot of people trying to speculate based off of what they hear at the FOMC, but some companies are obligated to take actions in the market based off of what they said because it's relevant to their business, right? So it is possible. So a good example would be when the FOMC first announced quantitative easing. That day, the market actually closed down on the S&P 500, and then in the long run moved up. And so it was just the case that the volume that came out that day was dead wrong about where we were going to go in the long run. And so a lot of people watched that day and saw that the S&P 500 moved down, and they say, well, the market is always right, so that means that quantitative easing has failed. And then they ended up missing the best buy location in the history of ever, right? So that kind of details matters, right? This is where trying to teach the whole microstructure thing, I guess, is kind of important. Which is to say this. I'm giving you the conclusion. The way that things should be done is you look at all of the data and then you make the conclusions. So when you read Bouchot's book, that's what they do is they show you the models and the data, and then once they've shown you all of the datas in the model, then they start getting to the conclusions, and then at the end they get to, okay, well, markets are not informationally efficient. They're technically efficient, but they're not informationally efficient. This is why you can still be profitable for market making activities. This is how they do it. This is what the impact of, and then this is what all of that information suggests is going to be the optimal execution strategy on Grand Chris. Okay. And that's how they build it up. What I'm doing is I'm just saying, listen, this is what it means to you. But you're going to have to go and read the book if you really want to really understand how they came to that conclusion, even though I can kind of try and give you the highlights of it here on stream or in the videos, Market maker does not take any position against anyone. They protect themselves. They have no position on whether. I think that's an accurate way of putting it. Yeah, that the market maker is a robot. The market maker could be a person, and the person could come in and say, I'm more concerned about upside risks today because of the Ukraine, in the treasuries. They could say, I'm more concerned about upside risks on the Ukraine thing today. So if we move up, I'm not going to take orders against it. They could come in and give it a bias like that. But generally speaking, it's not coming in and like hunting you. It's not coming in and saying, well, TLA trader took a trade, and so I need to hold and wait, and I need to move price to his stop, and yada, 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 yada. That's not how the market maker works. The market maker just reads the volume that it has and sets its bid and ask based on what the fills have been, and the randomness of the market just takes care of it. And if you're taking any kind of a trade that is against that, then on average you're going to lose money. And the only way that you're going to make money trading against that strategy is either one, doing the same thing that they're doing but doing it better, or two, you have real information about where it's going to go. So how do they protect themselves? Well, that's so like part of the way that they protect themselves, I would say, is that they have a huge bankroll, right? So what you can do, we've shown this on stream a number of times, right? It moves up, and then what do? I just add more, right? And I'll come in and I'll say, well, I don't want to take it against that one because that's some strong order flow against it, right? I want to wait until I start to see that low latent liquidity, start putting some orders above that area, and it will even out in the end. And if I'm taking fills both sides as much as I can, randomly, in the end, I'll make money, even if there's a really strong position against me, as long as my price that I'm offering to them accounts for the probability of informed trading. In other words, they don't have to trade against you. The randomness of the market just takes care of it for them. But the conclusion is the same. That's why I keep saying, like, you might as well assume that is what they're doing. You might as well assume that the market maker knows that Seth is buying into 13 and that his stop is at 11, and that I should try and not hold very many bids until 10 half so that price will move against Seth and stop him out, right? You should just assume that, because that's essentially what's going to happen. The way that their models work basically end up causing that to happen, even though they don't actually have to know that you have a specific position there and everything. Like the net result is the same anyways. So if you just assume that the market maker is out to get you, you're going to trade differently, right? How are you going to trade? You're only going to take a trade when you really know that it's going to go this way, and the market maker would be stupid to try and push against it, right? You have to actually know something. Sometimes we think we know something and we don't. That's the problem, but that's where the flaw is in my strategy. But I think that that's basically your only choice. It's your only choice. Not saying that everything that I'm saying is going to make you a profitable trader. I'm just saying it's basically like your only real chance. And it's up to you to be good at it. And is it possible for a retail trader to really be good enough at that, to really be informed enough? I don't know. I kind of question that. I'm kind of starting to think that on short time frames, it's a little bit too high of a bar. Maybe on longer time frames, but we'll see. We haven't been doing too bad. I mean, I've had some screw-ups, but like things worked out in the last week or two. So I don't know. We've kind of gone back into like every time I take a trade, I win. So. What is the market you're saying here? Putin is well hedged. Russia's gold reserve. Oh, right. Yeah. Yeah, we can change topics now. Unless somebody else is going to say something, we can answer a Ninja Trader question. Well, I tell you what, that when we had that move from the UN guy, you can see the square root law at work here, and it's changed. Can you see it there? I'll try and highlight it here. See the curve? White House says we're currently in the window where we believe an attack from Russia could come at any time. Oh, they've been saying that all week, though. I think I'll add one more thing to everything that I just said. One of the experiences says to me that the most important information that you can have is knowing when you don't have the information. Most important piece of information that you can have is knowing when you don't have the information. I believe that today is one of those days. We do not know what headlines are going to hit when and in what order, and there's going to be bearish and bullish headlines on this Ukraine thing. So it's better to just stay out. When running the strategy analyzer, if I'm connected to a live feed, the time frame I specified is held to. The strategy analyzer runs the strat for those days only. In market replay, the time frame specified seems to be ignored. Yes. So I don't run strategy analyzer on market replay stuff. I've never done. I really should do that because people keep asking me questions about it, but I've always ignored it just because I know that the Ninja Trader market replay is not really very real to life. But I do believe you're correct that if you run it on a market replay, it's just going to run across that whole market replay and tell you what the result from that market replay is. Why would you want it to do anything different? Do you have a market replay file that's like several days and you only wanted to do like 1 day of that? Foreign Minister Kuleba says fire from a tank recorded in eastern Ukraine. Russia restates claim that war crimes have been committed in Ukraine. I think we'll push to 118 in the fives to force option rolls. Oh, that would be interesting. This is a good thing that we should point out. There's like a huge order at 118 in the 5-year. Actually, let's just reset. Oops. Let's just reset our DOMs here. There we go. So if I backtest a month back, I'd have to load my charts with the month's data on live. I want to look back on my regular charts at their results. Why? So this is exactly why I keep hammering on this other point. You need to realize that for the sort of thing that we're trying to do, to know if this strategy that you have really works, you need at least like tens of thousands of trades. And you're probably not going to get that by looking back at the 90 days or whatever you have on your chart. So trying to have it on your chart and try and make a judgment about whether it's working now or not or something like that doesn't really make any sense. It's a foul. Because the other way that people to look at it is they say, well, if this strategy is on a win streak, then I want to try and take it. But it is just the probabilities of things what causes win streaks, and you can't come in and say because it's on a win streak, the next one is more likely to be a winner too, unless you have tens of thousands of data points saying that that's what happens, right? So I think that the way to do it is to go through the process that I lay out in the developing strategies series that I did a few months back, where you come in, you do your back tests, you slowly give it a larger and more aggressive data set as the strategy passes certain milestones. And then if you really get to a large data set and you're still seeing the positive expectancy, then you go and you start running it on sim for a month. And I wouldn't look at it, I wouldn't try taking a discretionary trade off of it or something. I would just let it trade off of the sim account for a month and see how it behaves when you start trading it against live data. Looking at the data is how you develop a strategy, though. You can do that. I have not found that to be a very effective way of doing things, Caleb. I mean, that's what I did for a really, really long time. And kind of what I have discovered is that if you're just kind of looking at what's going on and you notice something and then you try and turn it into a strategy, that you almost always end up finding something that's random. It's either random or it's an aberration that only exists within that one market regime, like within that 1 3 to 6 month period. And then you go over past year's data and it doesn't mean a thing. The strategies that I've found that seem to have something to it, I was basically using empirical data about how the market behaves, and where they have a mathematical model to explain how the market behaves, and then using that and turning that into a strategy. There has to be something fundamental about the way the market behaves, because essentially what ends up happening is the true inefficiencies that are left are never very visible to us humans. Anything that a human can see will already be arbitraged out. So it's better to start with the research and build something from there, rather than I'll put a bunch of indicators that I like on the chart and try and find a system from that. Because that's essentially what that essentially is that's what I call indicator soup, right? You put a bunch of indicators in a strategy, and then you shuffle around in the dark until you find something that works. That tends not to be very effective. But you can try it. That was my experience. White House is, I guess, talking about a bunch of different things, because they say that they're still talking about the China competition bill. Also note that on the halftime report at 12 o'clock Eastern time, Kathy Wood will be on CNBC, so that might be interesting. We'll probably get tons of fun headlines to make fun of from that interview. Oh, this is important. Exclusive. Iran nuclear deal draft puts prisoners enrichment cash first. Oil comes later, says diplomats, being reported by Reuters, which I suppose is good for oil, but at the moment oil is on the downturn. I find oil's reaction to this Ukraine crisis a little bit interesting. Like, gold and treasuries have been reacting pretty much to the way that they should be expected to react to the individual headlines. Although I say that the moves that they're making are quite exaggerated, but that's probably just because of the liquidity situation. Oil, not so much. Well, a lot of what oil has been doing is I can't really explain. Most Republicans think Pence had no right to overturn Trump's election loss. Poll finds. Interesting. You didn't respond to that. You should have been like, okay, well, I'll think about that. But then you don't say anything, and I think, oh man, I must have really disappointed Caleb there. Because he thought I was going to give him an answer like, well, okay, this is how you come in and trade this without having to do the replay. But no, it'll just do what if your strategy is written correctly, when you put it on a chart, it will only show you the entries as far back as the data set that the chart is. Right? Check out the series you mentioned. Oh, gotcha. What time is it? 8:38? Okay, so because I wanted to get to something else. What should we name the puppy? What should we name our Papillon puppy? You want me to pull the pictures up again? What are we gonna name him? I've been advocating for Nostradamus, but I don't know if I'm Nostradamus and Oreo. Did you guys have any other ideas? Bandit was one on the list that I think would maybe work too, but Chopper. Where do you get Chopper from? It's not a bad name. It just seems really left field. I'll put that on my list. When I go back and I look at my list, here, let me pull up my list. When I look at my list, I'm like, And it's not, those aren't very good names. What do I got? I see. I wanted to call him Goku. He's got the rotors from a heli. I'll put it on here, Chopper. He's got blades from a helicopter. Oh, because of the ears. Stephen Peoples reports Democrats aren't just losing votes in rural areas, they've been effectively ostracized from rural America, leaving party leaders with few options to reverse a cultural trend that is redefining the nation's political landscape. Don't give your dog some dopey ass millennial cultural reference. What would be a dopey ass millennial cultural reference, like Vegeta or Goku? Is that what you're saying? Is your you said that the other day. Pork chop. I don't think they'll go for that. Ranboo? Wait, why Ranboo? Ranboo? Rambo? Rambo isn't too bad. I don't know. Like the thing is I wanted an edgy name for him because he was when he was younger, he was very dark. But he's kind of lightened out a little bit. It's more, instead of black, it's more like dark brown and brown. And now I just look at it and man, I just think this is just the cutest dog ever. I don't need to give him an edgy name. Because he's a cutie. Hu Jixin on Twitter. Remember, this is China's, I guess he's kind of been discarded, but he was China's propaganda mouthpiece on Twitter. He says, the war has broken out. In diplomacy, though, Ukraine latest Russian expels deputy chief of U.S. mission. Basically saying that kicking him out is a good thing for Russia and Ukraine getting along. I don't know. Bob. You can name him French Fry, but don't go with some overused comic book cartoon video game name. Fine. Nostradamus is, I can do historical though. I can go historical. I want to maybe go historical booger. I'm gonna call it booger. Bob. And call him Robert. There you go. Oh my gosh. So most of the names that we put on there were just like French names. Victor, Pierre, Marcel, Jacques, Napoleon. I think that Napoleon would be a great name, but I bet that there's probably too many Papillons named Napoleon, so I'm not going to go with that. Hugo, Renzo, Pascal, Bingo, Sibby. I don't know where that one came from. My wife brought that one up. Zeke, Ziggy, Sebastian, Percy. Mythology is cool. Our dogs are named Nero, Kronos, and Ares. Odin or Loki. I don't know if he's an Odin. And I think that if I called him Loki, it would be jinxing him because I hear that Papillons are really smart and can be a little mischievous. Name him Steve. Steve. Isn't that kind of a lame millennial reference though? Whatever name you choose, you will probably still, it's a boy, you will probably still call him Munchkin. You know, my son is named Asher. I wonder if there's any kind of name that I can choose that will go along with Asher. Emmett's having puppies. When we studied Aries out, we took care of his 5 puppies for 11 weeks, and it was the best 11 weeks. Yeah, right. That's what I'm told. Somebody's asking me about data. I think they're having trouble deciding what they want to do. Did we? I haven't heard anything on the squawk. I'm sorry, I didn't see the spike there. That could be. That could be other headlines. Biden says the U.S. believes Russia is engaged in a false flag operation to have an excuse to go into Ukraine. All right. Yeah, what kind of dogs do you have exactly? That sounds like a pit bull kind of a name. A big dog, at least. Maybe not. Pit bulls scare me, man. Yeah, I used to be fine with them. I remember a lot of people on my mission had pit bulls. A lot of people in Missouri have pit bulls. Oh, you have husky buttskis. I gotcha. No, a lot of people in Missouri had pit bulls. And I was like, oh, it's just fine. It's just a dog that can carry around a bowling ball, but they're perfectly fine. I should have known that. You're right. You've talked about huskies before, but I forgot. I can't remember everything. I'm very forgetful, really. But then my wife, my wife, I think, is on anti-pit bull Facebook or something, because she keeps telling me these stories about people and children that get killed by dogs and stuff. She wants a larger dog, but it's like, but not a pit bull. Not too large of a dog. And then the kind of dogs that she brings up, I'm like, that's not really actually much larger. Like, that's not going to act like a big dog. It's not going to have the confidence of a big dog. So that's why, part of why I said, well, let's get a Papillon, because Papillons kind of have the personality of a big dog. They're really confident and very, very eager to please. Well, there is a big iceberg there at 13.5. A very big iceberg there at 13.5. Let's pull the Papillon back up here, but make him smaller so that we're not blocking the 10-year. Yeah. There we go. You can just send me a picture. Oh, yeah. Oh, this is a very good looking husky. He's like, why do you make me live in this jungle? I meant to be in snow. But water is cool. Show the other one. Oh, there was a second one. Didn't even see that. You got 2 huskies? Dude, is having 2 huskies a little bit of a... Isn't that a little zany? Doesn't that get a little zany having 2 huskies? Maybe you have a large property. I guess kind of the way that you talk, it probably would make sense that you have a pretty large property. If they were just inside the house all the time, that would drive me crazy. Huskies are crazy dogs. They work together beautifully. Man, I've seen so many videos on TikTok of huskies like complaining about things and stuff. Like they don't like something and they'll just go. I've seen a lot of huskies out there. Somebody nearby, I think it's just the same husky, but somebody close by in my neighborhood has a, whoa, there's a big bid just placed there at 14. What is with that? Is the treasury going to move a little bit higher here? Maybe. They're well behaved. I have a vacuum in my house. I have to vacuum my house 2 times a day during shedding. Oh man. Yeah. Well, so here's the thing is, remember, I've been having trouble with allergies, right? Well, lately, there was just a smell in the kitchen, I think. And so I put it over in the kitchen, by the back door, actually. Cause I would like, I have like my kitchen and my family room are pretty much, and the dining room would be pretty much all one big room. So like I would have the thing over in the family room where, I watch TV, and having the air filter over there didn't really do anything. But putting the air filter by the back door seems to help a lot. And the dog kennel is over there. So I'm like, has it have something to do with the dog? And like this dog, he has like allergies and his skin is always like, he's always got a rash or something. So it's like he probably sheds more like skin than a regular dog. I'm like, am I allergic to dog dander? But then that doesn't necessarily make sense because I seem to get it when I'm in bed too, if I'm not asleep. So I don't, but maybe it could be I'm allergic to multiple things. I'm wondering. So and my wife said absolutely, like, to get the Papillon, I had to tell her, no, it's only seasonal. It's only seasonal, and they have silky hair. It's not the same as an undercoat. She said, oh, okay, but I think that she's still going to be mad, like that there's too much hair everywhere. The third one came out muddy because the woman who owned the female had an intact golden retriever and German shepherd, so he came out interesting. Which one is that? This guy over on the right? Yeah, he kind of looks like more of a regular dog with husky patterns on him. Okay, and we did see them start trading into 15. Yeah, the one with funny. Oh, right. Yeah, funny ears. I think Papillon's so this guy, the Papillon ears, they go straight up. And it's funny to watch his ears because when he started out, they were so floppy. He's 110 pounds? Wow. One of the things with this guy here is that what's going to happen is people are going to be like, aha, you have such a small, because sometimes people try and make fun of you for having a small dog, you know? Or like if I was still single and they'd be like, that's not a real dog. And I'd be like, do you think I care? He's tiny. Like, look, this guy, the dog is only as big as his hand. The dog is only like this big right now. And as big as they get, they only get like that big. When he was a puppy, we were hoping his ears would stand up, but they never did. Show you what he'd look like. I bet you he would look ridiculous with pointy ears. I can see one ear is standing up and it looks kind of funny. Like if you just took that and mirrored it. Well, we got one good swing here in the ZN. I don't have too much risk on right now, and they're kind of like to my break-even point, and I could probably handle a little bit of heat on this. You know, I'm willing to give this a day or two. So I guess it remains to be seen where that one goes, but we'll keep that one on. We've basically, I did like take that one off for a little bit because of the CPI, I think it was. But now it's back on. Trying to be a little bit more active with it because I feel like that on a lot of this decline that we had, I should have been more aggressive with it. So when it's on its way up, I am adding a few contracts and trying to either trade the range or really get the high end of it. Let's see here. Let's just real quick. I want to, before we gotta go, it's time for me to get going. Bank run. Canada's top banks mysteriously go online. Yes, because these guys have been, a lot of Canadians have been taking their money out of the banks to protest this decision that Trudeau made. Oh yeah, he is. Well, the way is marking is because it's like husky pattern on him, but it's not actually husky hair. And the ears are kind of odd shaped. Let's see here. Elon Musk accuses SEC of harassment and weaponizing his securities fraud settlement. Rabo, everyone is hoping there is a master plan, but there is none. This time, Biden senses that Russia will invade the Ukraine, and the Zero Hedge never gives up on this. Well, okay. Walmart. Buck surging costs, supply chain chaos with strong results in outlook. $10 billion stock buyback. Wow. Okay. That's about it. I didn't see anything. You say he's a good dog, though? Good. Well, anyways, you got any better ideas for this guy than Nostradamus? Let me know. We'll have a vote, maybe. But I haven't found one that I like more than, like, at first I was like, I don't know if that's really a good idea if the wife would. But now the more I get it, the more I'm like, yes, let's call him Nas. Let's call him Nas. All right, guys. Tomorrow, don't waste your bankroll here, right? I don't even know if we'll trade tomorrow, but maybe things will cool off by Monday, right? In the meantime, stay profitable, friends. Actually, Tuesday is a holiday.